Mining Scout auf der Mines and Money in London 2014. Weiterhin suchen wir nach interessanten Gesprächspartnern und ich freue mich jetzt, Polny von Gold 2020 Forecast begrüßen zu dürfen. Bo, it's a pleasure to have you.
Thank you. I appreciate you having me as well. Thank you.
It's kind of a weird situation right now in the market. Commodity prices are in a down movement. What do you think is the sentiment at all?
Well, in a bear market, the sentiment should be terrible. So in sentiment overall, everybody's kind of depressed and sad for the price of gold. Even though people still believe in the metal, many people do, the price after 3.5 years off a $1,900 gold top, and now you're sitting at $1,200 gold, the sentiment is in a way sad or depressing, because people would love to see $2,000-$3,000 gold and not $1,200 gold.
So mining companies are facing issues right now with decreasing profits right now. They're high on debt in many cases. What do you think might commodity prices do in the near term or longer term?
Well, with mining companies being low, that's just a reflection of the gold price. When gold moves up, so will the mining stocks. So mining stocks will follow gold, and they will not move up until gold moves up. So in order to know what a mining stock will do, what you have to do is you have to study gold. And so what I do is I study gold cycles. I go back 20 years, 50 years, 100 years. And what I end up finding is that life is amazing. What it does is it replays itself. History repeats. And to say that it doesn't is absolutely incorrect. To say that a cycle doesn't exist is stating that you don't know what you're speaking out, because cycles do repeat for the same reason. You have winter, summer, fall. Guess what? Those are cycles that replay themselves. Well, gold is a cycle. It has a cycle, and by tapping into where we today are in gold cycle, you can forecast what the mining stocks will do. And so what I've foreseen and see currently in gold, which therefore translates into the mining sector, is currently gold made 4 bottoms in the 1180 to 1200 range in the past year and a half. Those 4 bottoms complete a complete cycle. And so now a wedge is formed. And on the last hit, which occurred, I believe it was November 6th, at the price point of 1130 gold, that was, in my opinion, the final cycle low for gold. It went up, and then it just dropped about a few days ago actually, into Monday, which was a couple days ago, and it bounced off 1150. 1150 is higher than 1130. Technically speaking, on a chart, that's called, you could consider that a higher low. So before gold could potentially rise, it required and it needed to make a higher low. It did. It happened with a Swiss referendum. It went down to 1150, reversed, and closed at 1200 on the day, or above, whatever, maybe 1210, whatever it closed at. But the point was, the 1150 target held, and it created what's called a key reversal day. So charting cycles are now complete. All that's missing is a very powerful, a very aggressive move straight up on gold and silver. And guess what happens when gold and silver go up? So will the mining sector.
So what do you think, how high will gold go up, or how high will silver go up?
My first target for gold is 2,000 plus, so between $2,050 gold to $2,100 gold will be my initial first target. That said, for silver, possibly in the $60 range, $50 to $60 range. Silver's a little bit more of a wild animal because it can move a little more, so it's a little harder to predict the silver price versus a gold price. So, but again, a gold price of around $2,050 to $2,100 would be a first cycle target, and my target for that is soon. Okay, I'm telling you soon. If you want a maximum time point, again, the specific time point I give to my subscribers, but the maximum time point before that should be achieved would be June of this coming 2015.
Okay, so what do you think is the long-term potential for gold and silver?
The long-term potential for gold and silver, but let's talk about gold. Currently, at least, would be a gold target of a minimum using today's prices, not talking about an inflated price if we have a massive inflation hitting or based on the amount of currencies printed, but just using today's numbers, my Fibonacci calculations takes gold to a minimum price point above $5,000 into the year 2020 to 2021. It's a 21-year cycle minimum off of the 2000 low, the year 2000 low.
So German investors might not be aware of your website at the moment, so could you please give us a short overview of what you're presenting there, what kind of your technical analysis or your cycles you distribute there?
My website is gold 2020, so gold2020forecast.com. You can go there. I've got several interviews that I've done over the past few months. I think my first one I did was with Kitco in May of 2014 of this past year. I stated there gold would make a high into summer, which it did. It'd make a low into approximately, I was at that time thinking we were looking at about August to September. Unfortunately, it's been dragging and it's been pulling downwards, at times been extending downwards. And so now we had to make the final low, and the final low came in on November 6th. And so that was a low that I was speaking about that would occur from the Kitco interview. Now that the low is achieved, there's a last point to the interview that I talked about then, and that last point was very clear that gold would have a stellar and amazing finish to this year, 2014, and we still have another month to go. So the month's not over, okay? And the cycle this cycle will continue into 2015 into a cycle high. Once a cycle high is achieved, then it will be important, like I was speaking with you earlier, silver will be a sell. Even though silver is a trade of choice now because of the ratio, but silver should be an exit position, and so will the mining sector. And that point, and then with silver, I would at that point not sell specifically, but I would swap the silver position for gold, because the ratio would appreciate silver will go up faster than gold on the move up. But then when the move up achieves, I expect next year an equity market collapse or very aggressive drop next year in the world economy. When that develops, you do not want to be holding silver, because silver is not a very good deflationary hedge versus gold. Gold will hold up much better in an economic collapse.
Okay, thank you very much. It was a nice talk to you.
Thank you, I appreciate it. Thanks so much.